this basic tutorial about the sentient levels. If you're seeing this particular video, it means that either you have already subscribed to this service or you're planning to subscribe. Before that, you'd want to know what are the features and stuff. So this is not a training video as such on how to use the levels, but this is kind of a feature too. I'm coming to the training part a bit later. So what I have in front of me is Bank Nifty index futures, and today is Saturday, 4th December. So this basically encompasses the whole week, past week, from Monday to Friday, and what the levels were at each point of time and what the levels mean and how we could have traded and stuff. So at the very basic level, we have an upper level which is denoted by the blue line, we have a lower level which is denoted by the red line, and we have a kind of a balance level which is denoted by the yellow line. Now every day these three levels are plotted, as you know, and as you have seen, I have given on Twitter that these levels, when they are plotted, we plot something called a trend ratio. So 29th November, I am doing Bank Nifty, but the same method is obviously applicable on Nifty. These were the levels: 36,613 upper, 35,831 lower, 36,222 was the balance, and my trend ratio was 0.50. Now the trend ratio basically means, the very basic meaning at the very basic is primarily that if the trend ratio is between 1 to 2, it's kind of a neutral view of the market for the day. If it is less than 1, it's bearish. If it is greater than 2, it's massively bullish. Now obviously a massively bearish can lead to short covering, can go down further, bullish can lead to even more upsides, or it can fizzle out. We are coming to that later, but let's concentrate on 29th November. So we have the three levels, and we know that the trend ratio would be 0.50, so the markets can be bearish at opening. So this is your 29th. Let's just increase this a bit. Okay, this is your 29th basically. It starts from somewhere around here, ends somewhere around here. So if we see that 0.50, what I've seen is the trend ratio initially in the morning has a huge impact on the markets for the first 15 to 30 minutes. So if the trend ratio of Bank Nifty was 0.50, which means the Bank Nifty was strongly bearish, what we saw in the markets was market opening at the balance and just hitting it out of the park. It opened somewhere around 36,350. And in the next 10 minutes, it was down to 35,486. It's around 900 points. Bounced back equally faster, but the damage was done. 800, 900 points in the first 10 minutes is not a matter of joke, right? Point one. Then it goes up, goes above this lower level by 9:30. And for the whole day, it doesn't come below the lower level. It starts going up and stuff. So what we are going to do is, we are going to trade somewhere near the balance, somewhere near the lower level, or somewhere near the upper level. Okay, let's go to the next day. Next day market opened. Okay, next day was basically 30th November. Your trend ratio was still 0.67. So market was kind of expecting a short. Let's see what happened at the opening. Market opened and jumped up in the first 5 minutes, went up, crossed this upper level, correct? So crossing the upper level is bullish, which is very obvious. And then from that point, 36,417 went up to 36,800, 400 points in the next 30-35 minutes. From there it sold off, took some support at the balance, bounced off, broke the balance again came down. Now on December 1st. 1st December, your ratio was even more bearish. 0.33, it was one of the lowest ratios we ever saw, right? 1st December, market opened somewhere around 35,795, jumped up and hit the upper level, stayed there for around 10-15 minutes and then sold off heavily. Came down exactly to the balance. So from this place of 36,263 to 36,936 was somewhere around 350 points, came down, went up, took resistance, again jumped up. In the evening, it again crossed and went up and stuff. This is 2nd December, the expiry day. Just bear with me if you are finding this a bit fast. These were the levels. Your trend ratio was 1.38, which was kind of neutral. Market opened, took support at the balance, went up to a certain point, came down, exact balance support, again went up. 3rd December, that is yesterday. These were the levels, and this was kind of, I would say, neutral. Market opened, went up, again the upper level worked as a resistance, came down, went up, came down, took support at the balance, broke the balance, came down fast. Now a few questions might arise in your mind, which would have arose in my mind if I was using this system. Concentrate on these 2 points. Point 1, this particular point where the upper level was breached and the market went up higher, correct? And this particular point where the upper level was breached and the market sold off from there. Now the question is, which is very obvious, how do I know that if I am above this particular level, I buy, or this level will hold, and I sell? For this particular reason, you will be getting access to an indicator which is called the Sentient Trend Vol Analyzer. That is, it analyzes the trend and the volatility of the market at the same time. I will first give you a small explanation of the indicator and then come to how to use this in this particular days. Okay. Analysis is simple. If this histogram is red, below 0 and going down, this is basically a very bearish market. You should be looking for shorts. If it is blue and going up, it's basically a strongly bullish market. You should be expecting the market to go up. If it's yellow, it's kind of neutral. There is no trend. So this is basically bearish. This place is neutral. This is bullish. Bullish, neutral, bullish, bearish, right? I deliberately removed the price chart in front of you so that the price doesn't affect what you're seeing on the indicators. Now, along with this, there's another thing running in the background. If you can look, the background color is changing. It's either red or light blue or white, white, silver, whatever you call it. Explanation is simple. When the background is red, market has a very high volatility. When it's blue, the volatility is normal. When it's white, the volatility is very low. If you are an options buyer trading intraday on Nifty and Bank Nifty, the places where you should trade are when we are red or minimum blue. Don't be an option buyer when it is white. Option whites are basically the option sellers ranges. Option sellers would be at a very advantage out here. So if you are an option buyer, simple thing is the trend should suggest something and the volatility should be high or normal so that you can enter a trade. These white regions, if you enter a trade, it's very difficult to make money buying options within the day. As you know, I guess, all of you know, that options on weeklies have a continuous theta decay almost every day. So if the market is not moving for 1 hour, 1.5 hours, even 2 hours, then you see the options prices continuously decaying. So as a buyer, you are at a disadvantage. Okay, you will be at an advantage when the volatility is high. Now let's come down to the price chart also. Okay, let's again go back to 29th. 29th morning when we came in, remember? This was your 29th morning. Your trend ratio at 0.50 suggesting bearishness. And the indicator, the trend indicator, prior to that, before this closing, if you see, it was very strongly bearish from the day after. That's why this move was kind of expected. Okay. Number 2, let's again come back to these 2 positions which I just showed a few minutes earlier. As I said, 2 points, point 1, point 2. How do I know that this will break out? How do I know this will not break out and this will sell off? Look at this indicator. This is bullish, strongly bullish, right? And it's not just bullish today. It was neutral to bullish. It started from yesterday. See, the previous day market was around 245, 3 market was actually selling off. But the indicator was signaling that some bullish activity is going on in the markets. So this day morning when the upper level crosses, I know that the market trend is basically bullish. If you see the volatility, it is blue, it is normal. So you can be an options buyer out here, call buyer, where the market goes up. Now come to the second position, this one. This is also where the upside is hit, right? Market, if you see out here, is strongly bearish. From the morning, the volatility is picking up. So if we are bearish and we are hitting the upper level, this will be a resistance. So from here, the market will sell off, and from here, the market sold off. By the time we broke above this again, see, the market had turned neutral. But also notice, this is a white zone till here. So this particular level, if you buy options, you will kind of go crazy with this up and down. This will not actually give you money. So how do you trade this region? We are talking about this region. Trend is neutral. Volatility is non-existent. It is quiet. The simplest solution would be, if you are an option seller, you go and sell, if you are conservative, the 35,600 strike, the lower level strike. And when the market is roaming around here, this will continuously decay. If you are a bit aggressive, go and sell the balance level strike. This is something like 35,900. Market goes around here, goes up. So you kind of make money while the option sleeps. Now see what happened on that particular day at this point. What happened here? Market turned bullish, the blue bars, and if you see, this is red, that's volatility is picking up. That is, this is the place where an option buyer can make hay. So by the time it closes out here, you are above the balance, this is bullish, volatility is high, you buy calls out here. This level is probably around 36,350 and market goes up to somewhere around 36,600 in the next 25-30 minutes. Got it? Okay, let's proceed. This particular day, this is the expiry day. I am talking about from here to here. On the expiry day, expiry was on 2nd December. I am talking about the weekly expiry. These were the Bank Nifty levels and the trend ratio was neutral. It was neither very bullish nor very bearish, right? What happens out here in the morning? Market opens. There's this sell-off, 36,444 to 36,340. 150 point sell-off on a expiry day morning seems it's going down. But if you see the trend indicator below this, it's bullish. It was bullish from yesterday and volatility was picking up from opening. So as an options buyer, you can expect this particular support to hold. That is, the balance line will not get broken and go down even further because simply the underlying trend is extremely bullish. So if you buy options out here, if you buy calls, you get a bounce. Now this again comes down in the middle of the day. Let me again use the screenshot indicator software so that it's easier for you to understand. So this is one point where we buy because this is bullish, volatility is high, so you can buy calls and get a bounce. This hits out here. This is not bearish, volatility is normal. So rather than buying calls, I can always sell puts, right? And on an expiry day, concentrate on ATM puts. If you sell an ATM put with a stop loss, market kind of goes flat, goes up, you can make money. So that's how the expiry day was played. And expiry day, this particular signal was too late in the day, right? Again, come back. This is 3rd December. That is yesterday. 3rd December, Bank Nifty, was basically quoting around, these were the levels. The trend ratio was kind of neutral. Morning, it went up. This was bullish. This was red. That is, volatility was high. And let's say you bought calls out here. You say everything is going good. This has turned kind of bullish since yesterday. At this particular bar, everything is falling into line. This is bullish, this is red, then volatility is high. So this bar, you buy calls. If you buy calls, you need a stop loss. To put it very simply, the low of the last 3 bars should be your stop loss. This should not come in. And in the next bar, it comes down and takes out your stop. Do you have a short out here? On this system? No. volatility is high, there's no poking out here. This again turns bullish out here. But do notice that the volatility is basically quiet, it is white. So you cannot be an options buyer out here. Now it comes down and breaks this particular balance. I am talking about this particular bar. And this is bearish. Red, volatility is high. We are trading below this. So this is where you buy a put. And your stop loss can be very simply the last swing high, which we generally use, which is this particular bar's high. So I'm buying a put out here. This is my stop. Market hovers around a bit. Now when it is hovering around like this, don't get confused, because this is continuously going down, showing even more bearish move up ahead. And it happens. If it is around 36,500, we sell off very fast to around 36,200 levels. Now this we are doing on a Saturday. So what this is telling me is, on Monday morning the markets will be under pressure because there's a huge bearish momentum which has been built in. So Monday morning when we get the levels, any of the levels break or it hits a level, I'll be looking at the level as a resistance from where to sell, or a breakdown of a level on where to sell. So this is the basic idea of how this whole system is going to be used. Now let's add a few more points so that it becomes even more clearer. If you are an option buyer, simply trade where the volatility region is red. Don't trade at the white zone. At least it should be blue for an options buyer. If you are an option seller, your best level is basically when you are in this white zone. You will be at much peace. Correct? Change of trend is most important. That is, if you are looking at this bar colors, change of trend you will understand in a second. I am going back to 29th. Change of trend means when from a red, yellow comes to blue, that is where the market is probably changing trend, and it will give you a signal much ahead of time. So when this is turning blue, this is like 3 o'clock after that. Okay, another rule we follow is no trading before 9:20, give the first 5-minute bar, and don't take any new trade after 3 o'clock because we'll be trading options. So after 3 o'clock there's a lot of randomness. So if you're entering a trade, kindly do it after 9:20 and do not take a new trade after 3 or 5. Okay. So this day the market is going to, so this change of trend was interesting, and this change of trend was interesting from yellow to blue. So this is where the change of trend came, then it moved up. From blue, yellow, red, this is where this particular bar is somewhere you should be very careful, because the trend change is there. The rest of the bars is bearish, that is fine, but the first bar where the trend changes, that is almost a very clean entry signal if you see this. I will show you some more examples what happened last week. This bar, this is actually one day before expiry. So red, yellow, first bar where it goes blue, this particular bar. See, then market moved. It looks small, but on Bank Nifty it was 36,367 to 36,527. If you are an options trader, you understand that this is big, right? Come here. This is the expiry day. Expiry day we had a small change of trend out here, but there could not be any trade because any short trade must be taken when a level breaks, not in the middle of two levels. So this is not a trade. Turns bullish, goes up. Third, yesterday when the market sold off big, this is bullish, fine, we are not trading, fine. This is the bar you should be very careful, this particular bar, because here the whole trend changes, right? And the market goes down after that. So that the market will go down was actually at 36,485, somewhere around 110. You could have expected that the whole trend which was bullish, and it was not a very easy trend, see. This was neutral bullish since 1st December, from here, yellow or blue. And the market was going up, going up, going up. The whole trend actually changes somewhere around here, strongly. This was a small change on the expiry day, but it was above the balance. But here when the change is coming, it is trading below the balance for that particular day. So here you can be almost sure that the market is going to go down, right? This is one point, change of trend. I have written down the points. Okay, how does this trend indicator match with something, let us say a standard indicator like MACD? A standard indicator like MACD basically will drive you mad if you try to trade it real time. It goes bullish, bearish, and all those, right? but this will kind of keep you in the major trend. But I'm not teaching you any technique out here where to exactly enter or exit. We have very specific tricks for that, which I'll be covering in the group itself. I'll be regularly sharing those tricks, skills, whatever you call it. So an MACD, when this is say bearish, and an MACD gives you kind of a sell. See, this is basically MACD sell. This is where the crossover is taking place. This is a sell. This is a sell. Here you sell. So along with the trend indicator, if you use a standard indicator which you already use, if you have a system, that should be a good trade, right? This is a buy on MACD. This is bullish to neutral. This was also matching with our system, so the buy is getting supported. I'm just showing a random indicator like MACD. This is the market is a bit tricky. This is a buy, but this one is telling you don't buy, so you don't buy. And see, market actually goes nowhere. This particular buy, trend indicator is bullish and market actually goes up from here. So you can use any other indicator which you like with this system, but use the trend vol analyzer as a filter. And as I said, if it is red, concentrate on options buying. If it is white, concentrate on options selling. If you are in a boxing ring, you have to fight with two hands. You just cannot tie one of your hands behind your back and say, I am very good with my right hand, so I will just fight with my right hand, or I am very good with my left hand, I will fight with my left hand. You don't do that. That would be idiotic, right? So if you are in a market, you might have a bias towards options selling or options buying, but keep both your those options open. It might happen that you are a very confident as a buyer like me. So when you're buying, your risk will be probably a bit high. When you're selling, your risk or volume would be a bit low. You can do that. You can use differential volumes. But this indicator will tell you the opportune times where to take what kind of strategy. Any other point which I had? Okay. Another point which I noticed and which I think a lot of you don't. You will see these examples in our channel when I show this. It's always very important to keep the last 3-4 days levels in mind. So what I do is, whenever I'm plotting a levels for a particular day, I keep the last 5 days levels plotted on my chart to understand where the structure is going, right? So here where I can see is this structure was actually coming down, then this breakout came and market went up. Structure is like this. This is 36095, which was the level for Friday. So next day, if I'm sure when I'm plotting the Monday levels, it will come a bit lower. So these are the levels which I will work. Previous last 5 days, the lower levels have not been breached. So when the lower levels start getting breached, and especially this particular zone, 36700 and something, then expect the market to go down even faster. But this 36700 was basically the supports for the last week, kind of lowest supports, and we already had this 35700 levels twice. So this will probably act as the first support on Monday if we get a lower level breakdown, and then it will bounce. So the plan is, this was kind of a, I wouldn't say a tutorial, it was a feature too. But what I plan to do is, in the channel I regularly plan to give you an analysis what has happened over the last week sometimes. There will be different tricks on where exact to enter, fix your entry points, stop loss points, how to manage risk, where to take profits and stuff. So those particular videos will be shared on the channel only, number one. And number two, as of now, you are seeing the system with the levels and this trend vol analyzer. But in future, there will be more features added to this system. For example, I am already testing something, probably next few months I will come up. That on this chart there will be particular points which will be marked zones, that where you can buy options, where you can sell options. It could be somewhere where we give a stop loss level or something. So these are the things I'm working on, and as time progresses I'll be slowly sharing them one by one over the channel. The reason I'm going for and that is the reason which why I have taken a commitment for a year, because I don't think if somebody is trading Nifty and Bank Nifty, that can be taught in 1 hour and you can make money across market cycles. So whatever I will see in the markets, I will continue sharing, and if you stay with them for a certain amount of time, say 6 months to a year, then the grip comes. Okay, last question. The levels will be on Nifty and Bank Nifty only. Okay, I won't give you levels on stocks, but you are getting this indicator at the bottom. This indicator, okay, another point is, use it on a 5-minute chart max. Above this, it doesn't have any meaning. So don't go try to plot this on a daily chart or a 15-minute chart or an hourly chart. Below 5 minutes you can come down to 3 minutes, 1 minute, etc. But it will be super fast actually on Bank Nifty. 5 minutes is the optimum, so kindly use it on that, number one. Number two, does this indicator work on stocks? Let us see. So I will pick up some standard stocks. Let us pick up Reliance. And just check what happened over the past few days, weeks, etc. So as I said, you might have a system on your computer which tells you where to sell Reliance and stuff. I want to point out a few places out here. This is where the system from being bullish to neutral turned bearish, right? It was somewhere around here. If you see the Reliance price, it's kind of flat, right? This is very basic technicals, but if you see the indicator out here, this is telling you a different story. It came down, went up a bit, started coming down even stronger. So this is kind of a sell. Now this is a sell on one angle. You can use any other system out here to sell. Concentrate on this period. Though we are going up, this indicator is coming down in a big way. So at some point, selling will resume. Unless this goes into yellow, don't stop selling. So again, it goes up. And if you see the indicator out here, it is not telling you that this is going up. This is actually prelude to a bigger selling, right? It actually says that we have changed somewhere around this blue. This place. Small correction goes up. There's another selling where we have red, then we have yellow, then we have blue. As I said, the first trend change. This place, Reliance said something is now going on, so we can now probably buy, and then it jumps. Right? What happened on just yesterday, because public memory is short. I want you to concentrate again, if you're doing on stocks, on the first trend change. Kindly remember this. Let's just go a bit of basics. Reliance was basically bullish. This whole zone was primarily bullish, and this is where it changed. See. This was not actually third morning. This was second closing, somewhere around here. It told you that trend has changed. And this day when it is coming down, you can see the indicator also is telling you much more bearishness ahead. And it falls. This is where we get confused when the market congests. There's a very simple way to trade that. If you are a basic, if you follow some technicals, this is what was going on, right? Now, the question comes to your mind at this bar. Will it keep on falling? Will it bounce? Look at the indicator. It will keep on falling. So if you sell out here, you can give a stop loss out here. Take the right wherever it goes, right? This was Reliance. Let us pick something which is even more irritating. ITC. Yeah, and ITC is my futures too. One of my favorites too. Okay, let's see ITC what happens. Let's go a bit back. What I want to show you is there is this move from 210. No, not this one. Yeah. Okay, we can pick up this also. This is sometime in October. This is 233 and no, this was before that also. I actually did this trade, so I am trying to look for it. Yeah. This particular morning, yeah, this is very interesting. Watch. Just focus on this particular zone. This was red bearish, this was neutral. First blue bar, you see this? It tells you that the whole trend has changed from a neutral bearish position over the past day, it has turned strongly bullish, and there the move comes. This is where it's flat. Again, this is your first bearish zone in red. Market remains flat. Again, this turns blue, doesn't work out. This was the bigger move, and if you see, it immediately turned blue and took you up. So those were the big moves. But if we current down to the current market where ITC is kind of flat, that should give you a very good idea how this indicator will perform in a congested market, because everything kind of works in a trending market, right? Okay, so this is ITC over, let's say 29. Let's just do the last week. It's actually going nowhere, right? What's happening here? Say started trading ITC since Monday. Let's just humor me. Think you're day trading ITC. I know it's very irritating. 29th morning here, this indicator is already bearish. Opens, comes down. A bounce does not change the indicator level. Comes down. This bounce, this becomes blue, green, etc. Don't poke. First change, somewhere around here, sells off. Yellow, yellow, red. Again, first change, sells off. This change, flat. This becomes bullish. Move comes next. Bullish, does not continue, becomes neutral. This is again bullish. It's trying to become bullish. Then the move comes. First red change bar here, somewhere around here. Then it comes down. So I basically chose ITC because it's actually going nowhere. It's a range between 223 to 227. So if a stock is actually trending, it will give you a bigger move. But since everything works in trend, so my point is, this indicator which is shared with you works across the board, across stocks. There's no issue. If you are trading something like gold, this is MCX gold futures. Does it work? Yes. Again, kindly stick to 5 minutes. Don't go much above that. So this is MCX gold futures. As you can see, this kind of, again, focus on the major zones where the first trend change occurs, right? You'll be okay. I know a lot of people trade crude. So this particular indicator without the levels will walk across anything. So this was your first trend change. This is picking up speed, and then the fall comes. Blue, this, then it goes up. This happened when? Yesterday. Okay. This trend change, bullish, trend change, bullish, this is bearish, and this is picking up. If you just notice this, let me just increase this a bit. So this fall was kind of expected. So let's sum it up. On this particular channel, you will be getting the Nifty and Bank Nifty levels. You will be getting the trend ratio. You will be getting this indicator obviously given to you as an invite indicator over TradingView, number one. Number two, I will regularly post a Nifty, Bank Nifty, sometimes, not every day, on a bigger picture what is going on. I will give you my analysis. But what will not be on the channel is buy Bank Nifty here, stop loss this, sell Nifty here, stop loss this. Those exact trades won't be there. That you have to work on your own. But this levels kind of provide you a market structure on where to trade. And this will be a continuous process where time to time I'll be sharing videos like this where I will show you where the last week's trades, how they have taken place, how they have gone. Number one. Number two, you're getting this as the initial product, but this will continuously be improved over time, where we'll be using more indicators or systems on how to use this. Now, this particular indicator which you're seeing at the bottom and the levels which you're seeing in between, these are not simple technical levels. When I say the word quantitative, I use it very seriously to just explain that these calculations are pretty complex and statistical in nature. It is not a simple moving average or RSI or something of that sort, right? So if you stick with this, you are one step ahead of the market. You will be using levels which nobody else is using. If you're already using support resistance like pivot resistance, Camarilla, CPR and stuff, you will see these levels do not match with any of those. And over the past 4 months when I've been sharing these levels over Twitter, many a times, many days you have seen these levels matching to the dot. That cannot be a fluke. So once again, welcome to my channel, and I wish you the very best of luck in your trading. So this was kind of a rejoinder, product demo, whatever you call it. But more specifics, more micro level, more granular level will get in slowly within the channel as time progresses. Okay, thank you.